Welcome back to Overnight Accountants course on Realtors and reducing your taxes. In this section, we're discussing advertising. Now, if you got your Schedule C out and you're following along on Schedule C, you'll see that advertising is line 8. For the most part, with a few exceptions, we're going to go through this course line by line. There are a few exceptions for, I believe, the home office deduction. We're going to tie that into right after the automobile expense because they often tie together. However, if you got your Schedule C out, look at line 8 advertising. That's where the stuff's going to go that we're discussing here today. Now, this is, as you know, this is a very broad category, and what it includes is all of the costs of promoting yourself and the properties you are trying to sell and hopefully selling. It includes many items. It's very, as I said, it's very broad, and we're going to go over these items. We're going to give you some examples. There's probably a printout in the resources for this course that you can look and see. We're going to try to create a list for you for each line on the Schedule C of all the expenses that you can possibly deduct so you don't forget any. So look for that too when you're looking at the resources section of the website. So it includes website fees and listing costs on those websites, advertising and publications, of course, Facebook and Google ads. Make sure you don't miss any of these deductions. Email campaign cost, newsletter design, content, transmission, and mailing. So that's where you would put postage. Remember, you want to ask why you have an expense, not necessarily what the expense is, because often you would think of mailing items and the postage included in mailing. Well, that would be like a supplies expense or an office expense. That is really part of your advertising because it is part of promoting your business and yourself and your properties. Direct mail and flyers, billboards and banners, postage from promotional mailings, as I just said, branding items, okay? Things with your logo or your name on them, such as pins, calendars, magnets, and small giveaway items. We're going to have a note on here for branded items we need to make you aware of when you're promoting your homes or yourself. We want to make sure you understand that these are items that are purchased in bulk for promotion. It has your logo, name, and or address, because there are regulations about what constitutes as a promotional giveaway item. The limit, believe it or not, is $4 per item, or per items you're buying in bulk. If you break it down, it should be less than $4 each. Let's just say you have a fancy coffee mug that you spent $6 on with your picture and logo on it. You're going to be limited to $4 each as a deduction. However, that $4 may be considered a gift. However, that gift is limited to $25. It doesn't go under advertising. It's another expense under gifts, but it's limited to $25 or more per person. Now, if you have spent over $4 for each item that you're giving away, there's special record keeping, which we'll discuss later in the course regarding gifts. You need to get more information about the person you gave this gift to, and really information to show that it was a gift and it was only to an individual. We'll cover that extensively later in the course. I just want to make you aware of that, $4 per item for the branded items. Posted for promotion, as I said it earlier, branding items, discussed that already. Network group dues, food at promotional events as your open house. So if you're having an open house, it's open to the public, it's not just a certain people there, that's 100% deduction. A lot of folks believe, and it's a fact, that meals and entertainment are only limited to 50% deduction for most of those expenses. However, the food that you purchase for a promotional event, if it's given away to the public who attend that event, such as an open house, is 100% deduction. So make sure when you have those, make sure you track those expenses and always purchase those items through your separate checking account so you can track them more easily. Also, booth rent to promote your business, like fairs, home shows, etc., advertising expense, branded uniforms, and sponsorships for Little Leagues. Now, I have the word branded there. Make sure that you get something in return for that item, like your name on the backs of their shirts or your logo put on their uniform somewhere. If not, it may just be a donation. So make sure you're getting something in return that promotes your business so you can get this advertising expense, and it's not a itemized deduction. Much better to get it as an advertising expense. Promotional donations to charities for advertising or developing goodwill in your community. And you'll notice I say promotional. Make sure you're getting something in return. You want to prove it was advertising. So make sure you're getting your name listed somewhere, you're getting a plaque, you're getting in a bulletin, you're getting something back for that. Or even we'll discuss later how you can use charitable donations as long as you put them in your newsletter. You use them to promote your business. That'll work too. So anyways, promotional items. Signs and magnets for your car. Remember to deduct those if you have signs or a magnet for your car. Your vehicle signage and wrapping is also deductible. Labor of putting up signs, like say you're hiring folks to put signs up for your open house or to promote your listings. A lot of times they'll do those on the weekends. Around our area, they'll do it on the weekends because the DMV folks aren't driving around picking them up. They usually do that Monday morning. So they pay folks money to put those signs out. Now you see in parentheses here I have a 1099 because if you pay somebody over $600 in the course of the year to put those signs up, you are required to give them a 1099. We discussed that earlier. Note, business cards, letterhead, this is kind of surprising for a lot of folks. Business cards, letterhead, and envelopes are not considering advertising expense by the IRS. What they actually are is they are considered supplies, line 22. So your business cards, which you think is really, you're going to your networking groups, you're giving out your business cards, that's really not an advertising expense. It's still deductible, of course, but it really goes on line 22. So just want to make you aware, that's kind of semantics, but it is what it is. All right, here's some areas I want you to be careful of as you're going about your advertising. Food for open houses and mixers. They have to be free, we discussed this a little earlier, but free and open to the general public. Remember your purpose. I always ask why. Your purpose is to promote the sale of a home or you, and the food is really incidental to the event. You're having little snacks there for folks to eat, you know, as they come in, but it's really incidental. Your primary purpose is promotion. Keep proof of this. Make sure you have proof in order to take this deduction for your food. Proof of the event and your advertising. Keep copies of your flyers, put it in your calendar, print out your posts on Facebook, whatever you may do. You just want to have as much proof as possible to prove this deduction. Remember, every dollar adds up. Every dollar deduction is going to save you between 30 and almost 50 cents off your taxes. Keep receipts and purchase separately. Purchase these items separately through your business checking account or with business funds or your business credit card. Parties, I want you to be careful of this. Holiday or other parties. These will not be considered advertising if you have invited guests and it's not open to the general public. That event is not considered advertising expense. However, it may be deductible as a meal and entertainment expense, but it's limited at 50%, and we will discuss this later in the course. Holiday parties. Now, if they're for an employee, that may be deductible. You may be 100% deductible if you have employees. And most realtors, chances are you don't have employees if you're taking this course. You're probably working for a broker in your 1099, as we discussed earlier. However, it wouldn't be an advertising expense. It will be a meal and entertainment expense deductible at 100%. So signage, yards, open house, etc. If you buy signs in bulk and you spend over $500 for those signs and they're going to last more than a year, you may have to depreciate these items, which we'll discuss later in the course. You can still get a write-off for it, but it's not really advertising at that point because you've really purchased what we call an asset that has a life over a year, and it's over $500, which is kind of a safe harbor that we use in our practice, which we'll discuss later when we get to depreciation. $500, it could also be $2,500 with an election is a safe harbor, as I just said a second ago. If it's less than $500 during the year on the same item, you can generally expense it. So if you purchase $500 worth of signs, I'm going to say signs, that's really one of the expenses you're going to have quite regularly. You will be able to deduct them that year, but if say you purchase $750 worth of signs on one invoice, chances are you're going to have to depreciate those. Doesn't mean you can't write them off the first year with a special deduction called a 179 expense, but just make sure you're aware of that. Promotional donations. These are much better than advertising than as an itemized deduction. For example here, an itemized deduction, and you have to itemize deductions, but this course really isn't about that, but a lot of you may not even be able to itemize deductions. But if you do itemize, you might save between $15 to $25 as an itemized deduction. But if you take it on Schedule C, that's going to be somewhere between $35 to $45 in tax savings for every $100 of promotional donations you make. It'll save you between $35 to $45, and that of course includes your federal, your self-employment tax, and then also your state taxes have incorporated into that. So if you want to take these promotional donations as an advertising expense, get something for it. You can get an ad, a logo, a name listing, a picture, etc. You could even use this to promote yourself in your newsletter, your website, press release, even on Facebook. If you're answering that, why did you do it? And you can argue that it was really for promotional, it was a win-win. You're helping your business and you're also helping the charity. Good for you. You can take it, you're going to save a little bit more money. Now also use common sense. So I'm going to give you, make sure your motive here includes public recognition. I'm going to give you an example here. There's a big difference between like sponsoring a child through a local police Christmas gift drive, using your newsletters and sending a press release to promote your participation in that event, versus say sponsoring an overseas child with a monthly donation. There's a big difference between those two items. And one is they're both very good. However, you're going to have a much harder time sponsoring an overseas child with a monthly donation as a promotional item in your community than you would, sponsoring a child through a local police gift drive. That creates a lot more goodwill among your community, and you can actually use it in advertising a little more effectively. So I just want you to use common sense there. Another area to be careful of is ads on your vehicle. The lettering and wrapping of the cost of the vehicle is deductible, but it does not make your vehicle deductible. Just because you wrap your vehicle in with your logo and your name on it and probably your picture on it, that doesn't make the whole vehicle a deduction. But you can still deduct the cost of wrapping or lettering the vehicle. So there you go. Auto expense, which we'll discuss in a lot of detail later in this course, is going to be based on actual business use, which we'll discuss later. It's basically your percentage of mileage that you use for business will dictate the amount of deduction that you're allowed to take for vehicle expenses. Not the signage or the wrapping on your vehicle or the magnets. Those are really 100% deductible. All right, uniforms and clothing. Okay. The cost of a shirt or a hat that you give away with your logo or name on it, cost of hats given away as a promotional item, yes, they can be deducted if you're giving away to the general public for up to $4 a piece. Remember we discussed that earlier as a branded item. Cost of shirt and hats you wear with your logo on it may be deductible. Let's go to uniforms and clothing with more. Let's discuss uniforms and clothing in a little more detail. We'll also discuss this later in the course. But generally speaking, now you're not an employee, chances are. You are a statutory non-employee for tax purposes. But these must be required by the employer if the employer wants to deduct it. It's not suitable for everyday wear, and that's a policy of the company, and it's not worn as such for everyday wear. They must be protective or distinctive, and you see I have a logo here in parentheses in nature. That is deductible. If it's protective or distinctive with a logo in nature, and it's not worn for everyday use when employees are off duty, that's a deduction for the employer. Now, however, you're self-employed, so this gives you a little bit more of a break. Your logo and hat wear is not advertising, it's supplies or another expense, and its expense is uniforms. So if you have a shirt that you wear as kind of your uniform that you wear around, say a polo or whatever with your name and logo on it, and you still wear it out in public when you're shopping or whatever, if it has your logo on it, it's distinctive, you're self-employed, and you will be allowed to take that expense. There's a lot of confusion in this, and there's also some different case law on it. However, generally you're entitled to that deduction. Here's an advertising tip. Okay, use your kids and your grandkids in your advertising. I want you to get professional advice on this. Hopefully you're using a tax professional, but if you are going to go this route, make sure you get professional advice before you do this, but you can use them in your advertising. You can pay them whatever a going model rate is or whatever that is, you can pay them. However, they're going to have to report that on your income as such, but you can pay and give them a 1099 miscellaneous if you have to, or you can hire them as an employee. Now, what I want you to think about doing here, if they're really little, they're not old enough yet, you can give them some of that as that they can spend for spending money. But if they're earning money, you may want to put those funds into a Roth IRA for your children. We talk about this a lot in our finance classes, our personal finance classes. But if your children have $20,000 to $30,000 in a Roth IRA by the time they're graduating from college, by the time they hit their 20s, early 20s, they may not even have to worry about retirement. So it's a great gift you can give your kids. And that's it for this section. We'll see you in the next one.